For all of the chaos, yes, chaos, I'll admit it, for all of the chaos that Trump 2.0 has brought us in the financial realm with his massive shifts in trade and migration policy, with regulation changes, with taxation, big, huge, the big, beautiful bill, all these things put in place in just 7 months, all these massive changes in just 7 months. And yet the economy seems to be taking it all in stride. And it should be poised right now for a march into the golden age promised by none other than the President of the United States. Now, to hear the Federal Reserve talk about it, they would just say, yeah, the economy's doing just fine. In fact, it's doing a little better than we thought it was going to be doing just 1 quarter ago, or I mean, actually, even 6 weeks ago. It's doing better even 6 weeks later. And even that number, when they're talking about maybe something more than 1.5 increase in the GDP, is belied by their own Atlanta Fed, where the Fed tracker, as I pointed out this morning, is now suggesting that we're going to be increasing around 3.6%. Oh, no, I'm sorry. Was it 3.6 this morning? Yeah, I think so. Anyway, 3.4, 3.6, and, more than the very last report that they had. So overall, the golden age is coming. It's going to be much stronger than what the Fed thinks. And that's going to be partially because of AI, but it's going to be partially because of the big, beautiful bill. It's going to be partially because of all the efforts that the president has made with these countries all over the world to bring new infrastructure, manufacturing infrastructure into the United States. That stuff takes some time, but we'll start to see it in the building trades and et cetera as they start to build out some of this infrastructure. Anyway, Tesla was up nicely on the news. They were up a full percent on the news that the Fed is cutting 25 basis points as expected, just what we thought was going to happen. But they also had their dot plot, and their dot plot says they're probably going to cut twice more this year. Now, some people thought we should only cut once more this year. Some people thought no cuts this year. And of course, but the overall consensus would be that it's looking like two more cuts this year and then another one in 2026. Now, other people think that that's not enough yet, including the president. And we'll see what happens over the course of now until next May. Of course, next May, we get a new Fed chair. And my guess would be that wherever we are there, and depending on what's happening with inflation, we should start to see significantly more cuts. Even if the Fed has cut 6 times by then, even if they've come down 1.5% by then, we might see another a series of cuts. Depending again, we certainly don't want the inflation thing to go crazy. So why is Tesla going up a full percent? The rest of the market was like, they were down. Most of the Magnificent Seven were down. Apple was only slightly up. Everything else was down. Tesla was a standout, a total standout compared to the other stocks, compared to all the indices. Well, you see, there's lots of benefits to Tesla. First of all, there's the benefit to the Tesla buyers. People that want to buy a Tesla vehicle will pay less per month, or Tesla will earn more margin by not having to spend as much to pay down the rates. You get that part, right? If you don't get it, let me know in the comments below. Sometime I'll explain it in more detail. Now, there's also benefits to Tesla in that this should stimulate the overall economy. And of course, when the economy is doing better, people are more inclined to buy cars. And then a third will be a benefit to Tesla in that those who use a method of assigning the current value. In other words, if you want to know what the current value of the company is right now, it's about 1.4 trillion. And the way that you can come to that value, there's a lot of ways that you can try to come to that value. But one of them is to say, okay, what's the future value I think the company's going to have in terms of the amount of earnings they're going to throw off and what I think the PE will be at any given time. And then you take that value and you discount it back to present value. And when you discount it back to present value, you use an interest rate. Well, the lower the interest rate is in the marketplace, the lower the higher amount that you're going to pay for the stock. So you have all three of those ways that Tesla is helped by interest rates coming down and with the promise of interest rates coming down more. Now, what else do we know from this cut and from the press conference afterward, from all the things that came about between 11:30 and 2:30? Well, The economy is doing, I'm sorry, 230, not, what did I just say? In California, it would have been starting at 11 and over at 12:30. Never mind. The economy is doing fine, according to the Fed. We just talked about that. They do acknowledge that some sectors like tech and the high earning population are doing way better than the rest. Okay, so tech sector is doing really, really well, and high earners, people making more than 100,000, are doing better than, let's say, the housing sector and the lower earning folks out there. There's a lot of confusion, I think, with regard to how well the people in the lower end brackets are doing. I think they're doing better than most people think they are, but they are still trying to recover from the horrible things that happened to them during Biden, when their earning power went down due to inflation and their wages didn't keep up. But now their wages are greater than inflation, and so they should be catching up, but it takes a while before you really feel it. Anyway, they are seeing some issues with recent college grads. They agree. They're seeing this in the news. I guess they're hearing it from other places as well, that suggest that AI might be impacting entry-level jobs like sales, customer service, coding, etc. We all have heard these things, and they acknowledge that. Powell also repeatedly talked about the lower levels of job supply, due to net negative migration. But he never ever, okay, so you got net negative migration, you got nobody coming in, and you got people going back. All right. So that means you have net negative migration, as opposed to 1 million or 2 million coming in each year. What do you think that that's just going to affect jobs? No, it affects the economy too. If you got a couple of million people coming in, they're making money, they're spending money, and they're increasing the economy. Well, if you get net negative migration, well, you're going to have a net negative effect on the economic growth. He never mentions that. How can he not mention that? It's a huge factor. It's impacting rents. It's even impacting the price of housing. This is one of the reasons why we have an oversupply right now. Yeah, oh, I know. These migrants, no, they don't buy homes. Of course they do. Now, it might just be that the criminals are the only ones that can afford the homes because they're making so much more money, but they buy homes and they're gone. They're going away. All right. So this is an important thing that people just aren't mentioning. He did say that the tariff impact, he agreed with Randy Kirk. He says the tariff impact is only about 0.3 to 0.4%. He called it tiny. He called it minor. He says there might be more impact later in the year and into next year, but it's not going to be a big deal. And he says, yeah, we'll keep watching it because we don't want it to actually have an inflationary effect as opposed to only a price effect. It's very hard to imagine how it would ever have an inflationary effect, because to have an inflationary effect, you'd have to have people begin to anticipate that there's going to be more tariffs. I mean, it's not going to happen. I don't know how it would have an inflationary effect. It's almost impossible to imagine. Anyway, I said it'll be between 0.4 and 0.8% out of the total CPI. And he's saying so far it's 0.3 to 0.4. He's slightly more worried about jobs, but he says that the worst case, the Fed believes that the worst case is 4.5%, and it's a 4.3 now. So it's only 0.2% higher than now. And that would be still in what would be considered solid. That'd be considered full employment. It's not, 3.5, but 3.5 is when you're struggling to find people to work, there's just nobody to hire. The bond market immediately rallied on the news, but then it reversed courses, and it ended up higher on the day, about 4 basis points. This could be profit taking. That's the most likely thing I can think of, because, we were at 4.5, and before the turnaround, it was under 4. It was about 3.96. So we came from 4.5 to 3.96. That is a mass. That's 20%, right? No, 20%. No, I'm sorry. That's 10%, over 10% drop. So an over 10% drop with over 10% drop in the interest rate means that the bonds themselves went up in value significantly as a result. And so at some point, people are going to take some profits. And oftentimes it's sell on the news, right? And that could be what was taking place today. I don't know, but that is certainly possible. I really believe that what you're going to see now is you will see a march down to under 4%, possibly initially in that 3.95 range, and then eventually going down to 3.75. The markets were also all over the place, but they went up and then they went down and then they went really down and they like fell off a cliff for a minute and then they come back a little bit. And Tesla was just following right along and did kind of the same thing. But on balance, it ended up with a strong showing for Tesla and the rest of the market flat, flat, flat. So just a real quick look. I'm not going to go through all the stuff. Brian Wang will be on later and we'll take a look later in the day. But we've got the bonds ended up actually right now 4.8. Okay, so 4.8 basis points, but that's still 4.074 compared to 4.5 not that long ago. All right, we've got Tesla ending up at over 1%, 1.01% during the regular hours at 425 and 86 cents. And then we've got it in the after hours going up even more to 426.06. So ending up at the highs of the day, which would obviously foretell very good things for tomorrow. We'll see what happens tomorrow. All right, so what do we got? We got Brian Wang coming up at probably about 4:15. I don't know if there will be a 7:45 show tonight because I did this show. And so I may or may not do a 7:45. I'll need something compelling to, encourage me to go, oh yeah, I need to do another show tonight. Otherwise, I'll just pass the night. But we will have Brian coming up. And then last night we had Brian White, which you may want to go back and take a look at because it was really good. And Brian and I agreed at the end. We said, that was really good. So we talked about some things that Elon Musk knows that we don't. And then we speculated about what the answers might be to the things that Elon knows that we don't. Because, Elon just bought $1 billion worth of stock in the company. Well, he must know some things that would cause him to go, yeah, I need to buy more of this company. So what does he know that we don't? And we speculate about what those things are and what the answers to the questions might be as well. And both of us agreed. It was a really, really good. So I'll put that card right up here. If you got a minute, you can go back and check that out. Is there anything else I want to tell you right now? I think that's it. So until Brian Wang and I come back later and have the later show today, the Good News Wednesday show, that's all I got for you right now. It's been great talking to you.